All right, what is up, everybody? How is everybody doing on this fantastic Thursday morning? Today is February the 23rd. We are in the year 2023, and this is the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Today, we're going to be taking a look at Bitcoin. We're going to look at stocks. We're going to look at bonds. We're going to look at Forex. We're going to look at everything. We're going to try to make sense out of all this. Bright screen incoming. Bright screen incoming. Today, we had CPI in Euro. We had GDP in the US and initial jobless claims. GDP came in at 2.7%. That could be revised. Forecast was 2.9%. That was a miss. And on jobless claims, we were expecting 200,000. We got 192. That also could be revised later. We shall see. And crude oil inventories coming up at 11, which we're not crude oil traders, so we don't really concern ourselves with that much. Occasionally we do take an oil trade, but right now oil seems to be just falling off a cliff. And we do got futures going, getting a little bit of a pickup on the gas side of things. But as far as where we currently stand, jobless claims always go up before a recession. We're not seeing that yet. The labor market is still doing extremely well. Recessions brings down inflation, so we could see a Fed that continues to hike rates. They have suggested as much that they will continue to do so. A couple of the Fed members said yesterday in the minutes that more than a couple were the exact words used, so that does mean more than two at least would like to see us continue to do 50 basis point rate hikes, but I am pretty sure 25 basis point hikes will be continued throughout until we start to see, something happen. Inflation is still up and holding at 6.2% or wherever it is, much higher than the Fed's projected 2% target. We got people that are saying that it is a mathematical improbability or impossibility for us to see a 2% inflation target in the year 2023. So if this is the case, then guess what? It's going to be a very choppy, very difficult trading year. This has been expected. On this channel, we discussed this months before we even got to 2023. We got core PCE is expected to be higher still. So we do still have that inflation problem. Mixed signals out there for assets. Overall, Bitcoin seems to be holding up pretty good, considering the fact it appears that some correlations are dying as investors remain very, very confused. And it's not just me. It is literally across the board. You've got bears at Morgan Stanley. You've got bulls at Morgan Stanley. You've got bears and bulls pretty much across all hedge funds and investment banks. You can watch CNBC, and every other person they bring on seems to have a different outlook as to what can be expected. Yesterday we took a short on Bitcoin. That short ended up playing out pretty nicely before we got the minutes down here. I did tell my members inside of the Discord that if they wanted to take a fade trade, in other words, fade the bearish move that we had before the minutes, then you would want to be looking to get long. However, you would only be looking to play that as a bounce, meaning you would not be looking for bullish continuation. You would simply look to get long, take profits as the marketplace moves up, and then you would be moving that stop to break even. Had you taken that trade yesterday, you made money, and you are now stopped out. As you can see, we got a pretty nasty downside move earlier this morning. Now, currently on Bitcoin down here, let's make it over here on the big screen real quick. Let's just bring it up. This is your day's range, 1 day, 1 minute chart. Very choppy. Nice move to the upside during the Asian session. Then you come into the London session where you do not make a higher or low on the day. You just kind of trade sideways and not do anything until that Euro news comes out. Euro news comes out. Bitcoin takes a nice spill to the downside. And then just before we get our important numbers, we get a push up into a 4-hour Heath level. For any of you that are new to the channel, a Heath level is nothing more than a supply zone or a demand zone. It just depends on what you're looking for. And you can see here, this would be your 4-hour supply candle, a nice push up into 4-hour resistance to perfection. To perfection. That would be a nice place to look for entries. And then you got that bad boy right there coming down to support. Now, there is no daily support here. There is no weekly support. You do have weekly resistance sitting right there. All in all, today is Thursday. So unless we get like a really nasty move lower today, this does not look like a very bearish week for Bitcoin. In fact, it would look like next week we would be potentially looking for either another choppy inside range bound week, or we could see a move to the upside. Unfortunately, that's not going to help us much for today. Today, we're looking at the open. It's already happened. And I was looking to fade this move, but I wanted to see a test of this weekly open, as that's where I was looking for entries. You could have taken an entry based off of 4-hour supply. As long as you got your stop above that wick high right there, you are probably sitting pretty good. I expect it to continue lower, and there is a reason why. You have this target down here that has not been tagged yet. Yesterday's downside target was this wick right here. If we take the bar replay tool out here and you do something like this, this was my bearish target. You can see that we did ultimately hit that right there. So that is when I took profits. That move has been stopped out with yesterday's fade trade when we got the FOMC minutes. So currently I am not sitting in a position as far as yesterday is concerned. I am still long Bitcoin from the lows down at 16,530. I will... What in the hell is going on here? Thank you. I will continue to sit in that long position until we smoke the 21 exponential on a weekly closing basis, if that even occurs. We do have if we get a retest back up in this area, we could watch it for a potential fade. But you can see, like, this would have been the expansion play right there, right? So, technically, this is going to be the area where you'd be looking to take profits. So, unless we get a retest up in here, there's really nothing for us to do because we're currently in the middle of the range. There is no long trade to take here. Volume profiles suggest the sellers are, in fact, in control of today's price action. And there you go. This is your day today. This is your daily range. This one box here and I'm outlining currently, that is your daily range. Here is your open. There's your move to the upside, and then there's your fade. So if we're looking for downside continuation, if you're looking for yesterday's low to be taken out, then you need to be looking for a place for potential entry. We cannot justify a decent risk to reward with where price is currently. So, like, where would you put your stop, right? Where would you put your stop? If this was your target, that gives you a 1.15 to 1 risk to reward. 1.15, that's not terrible. I mean, some people can justify taking entries on a 1-to-1 risk to reward basis. I myself would rather be able to get in there at a 2-to-1 risk to reward. But also, with what we got today, the market could absolutely take that news and do something completely different with it, right? Because it's mixed signals. So, whenever you got mixed signals, you've got investors taking positions, shaping portfolios that is going to create whipsawed sideways, disgusting price action. The dollar is not doing what I thought it was going to do. You can clearly see here that the euro is pushing lower and lower and lower, trending away from 2023's open. So that is bearish. That is not what we thought would happen. If I pull it out to the weekly here, let's get rid of that yearly support. You can see that you are currently trading under any significant weekly support levels. You did take out last week's low already. So the next area of liquidity to be looking for on a weekly basis is all the way down there at 1.04829. I do not see us hitting that target. Not today, anyways, and probably not tomorrow, as that would be a two standard deviation from where you've already moved. So, in other words, that would be, you would need a massive move for that to take place in 2 days. All right. So what we're gonna do is we're gonna watch the markets. Let me get the S&P 500 pulled up over here. We will be using the CFD, as there is no gaps. Gaps tend to muddy things up, as people are, usually looking to trade towards the gap. That's not always the best thing to do. Typically, gaps do get filled. The CME gap on Bitcoin did get filled with this move lower here, so people are getting bullish based off of that alone. Here would be your gap from that wick high to that open. You can see that that has been filled right there. Boom. Right? So you would have to break out to the daily, do something like this to find the rest of the gaps. There they are. Here are your current unfilled gaps on the CME chart. If you are a gap trader, you can see that you are trading in the middle of two significantly sized gaps. The one up top is much wider, so that's the one we were currently looking for Bitcoin to head towards, but it is stalling out. Now, I did post something on Twitter that looks a little bearish. Not many people have engaged with the tweet, so I'm not sure if they understand what I'm talking about here, but it's simple. These three lines are your cohorts. These are your investors. The red line is your young supply average, meaning your day traders, your near-term traders, whereas the blue line is your longer-term holders, your bigger traders, right? Your banks, your investment funds, your exchanges, things like that. You can see that price has basically moved up to a position to where all three cohorts, your midterm, short-term, and long-term hodlers, are all three into profits currently. So that could bring a significant amount of supply into the market. What that means overall, since Twitter only gives me a few words to use, is if these guys decide to take profits, then we could see a deeper correction on Bitcoin. It does not mean that I am bearish. It is simply me saying, be aware of your surroundings. And people could absolutely start taking profits with this mixed data and these mixed signals that we keep getting. Here is your accumulation model. This is the accumulation trend score. The whiter in color you are means the more accumulation is happening. The darker or brown color signifies no accumulation. You can see up here on the highs, you are not getting accumulation. In order to fuel that short squeeze or bullish continuation, you would typically want to see accumulation happening up there. And then last but not least, here is your 10,000 plus holding Bitcoin wallets. That means wallets that have more than 10,000 Bitcoins in them. Big, big, big holders. You were getting that expansion or that growth as prices were breaking down during that massive capitulation that we had. And while you were trending sideways, you were still seeing a slight move up. Since then, you can see that not only has this remained sideways, but one could argue that it would be slanted a little bit more towards the downward slope, basically saying that in order for Bitcoin to continue higher, you need those FOMO buyers. Those FOMO buyers have not shown up yet. In fact, you are looking at several weeks worth of price action here, and you're not going anywhere. I mean, literally nowhere. For the last several days, we've been trading in a range from 23.5 to a high of 25.268. Since that high was put in 3 days ago, you have been moving lower. That means, or when that happens, typically what we look for is we look for that trend to continue. You can see today traded straight up to your old resistance, and that is exactly where you peaked out on the daily's high. So here is the day's open. We can watch that or the weekly open. Here is the weekly open. The weekly open is just a little bit above the daily open. So I would say I would probably want to see a retest of that and a failure before taking an entry. And we're not that far off that level. So if we could get a spike up to there, that could give us an opportunity to look for a short position and target 23,779-ish. So that's where we currently are sitting. As far as entries on the S&P 500, you're getting a bullish push, and it's looking more. It's more than just a liquidity run, right? When you get a liquidity run, you expect the high to be smoked of the previous day, and then you expect price to roll over. Now, obviously, that can happen at any point in time through here, but you would have to literally go down into your smaller time frames to find bearish candles and then hopefully pick the right one to base a position off of. And that's not how we operate here. We look for high probable scenarios. We want the highest probable trade that we can find, and those are the ones that we generally want to take. I guess you could say that you are trading into a 15-minute resistance area right there. So if you are looking for short entries, then probably here would be where you'd want to see it roll over, as I see no need for price to go higher from there. I don't know why I keep trying to light it. Let's just put it out and get it out. Screw it. Let's get rid of it. All right, so that's where we're currently set. Let me go over here and make sure people can see my screen and all that good stuff. We can. Good morning. What is up, my few ledges? How is everybody doing this morning? Let's F and go, says Run Mountains. Let's do it. Good morning, traders, says Trade Talk. Hey, that's me. Good morning, everybody. How is everybody doing? Good morning. Good morning. What do you think about overall sentiment of the market in the near 4 to 6 months? Well, if you had asked me that last month, I would have said I am bullish. You asked me that right now, and I'm still bullish, but we're not getting that bullish continuation. The S&P 500 still looks okay structurally. You're still doing what I would be able to consider a pullback. You do have an old weekly res right there. And if you're watching the 21 exponential, which is a typical moving average to watch for trending conditions, you simply traded down to that and you have bounced from it. So you've literally traded into a good level or a good area to take bullish positions if you are indeed bullish. That price, the exact price at where you would have been looking to operate, would be 39.99 spot 40. But you're coming up against a $4,000 big figure number. And those 4,000 big fig numbers, or any big fig numbers, 3,000, 4,000, those areas can typically act as support or resistance. You've got 1 spot 2000 down here acting as potential support on the pound. So yeah, we'll see what happens. I was looking for a short position on the pound this morning based off of this right here. Took that on the test of resistance, and as it pushed down here into support, I took profits, and that position has been stopped out. So it's what I'm trying to say is I'm not having any. I'm making money, obviously, in the short term plays that I've been taking all week, but what I'm not getting is continuation. So when you're not getting continuation, it just literally means that you're in a sideways, choppy environment. And those are the most difficult environments to trade in if you are not, if you don't have a good strategy, anyways. Like if you're all over the place chasing price and doing all the things that one should not be doing. I have a very, very rules-based systematic approach. I always take profits when my profit targets get hit. I always move my stop to break even to take all of my risk off the table. This way I am only losing unrealized P&L if price decides to turn around, because let me explain this to all of you. Nobody knows what price is going to do. Not anybody. Not one man. All right? Not one man. Not one woman. Not one they, them. Not one person. Not one thing on this earth knows what price is going to do. There is a few of them out there that claim to know how the algorithm delivers price, and they claim to know how, where, and when the market's going to do things. But let me explain something to you. If that was the case, they would not be on YouTube. They would be trillionaires sitting in their yacht right now or on some beautiful island kicked back looking at a fishing pole or something. Right? Because why would you need to be on YouTube if you know what price is going to do? You just simply throw everything that you own into it every single time it's doing what you want it to do, and then boom, you just multiply your money by double or triple every single day, and you do that enough times and you'll have $1 trillion. So nobody knows what price is going to do. There are not many people out there that even have the slightest clue. What I'm trying to do for you is teach you a viable strategy that simplifies trading. You don't need to know a whole lot of words and, big terms and things. All you need to know is how to identify support, resistance, and trend. Once you know how to identify trend, then the probabilities of you getting in on the right side of the market increase. That increases your odds of successful winning positions, which in turn, over time, helps your equity curve ascend, right? That's what I'm trying to do. So, with that being said, S&P 500, like I said, pushing up on what should be clearly bearish news. The dollar should be getting a wonderful push on the news that we got today. It did right here last hour. Let's go to the small time frame here. Pull him up on the big chart. You can see that clear, massive spike right to the upside. Did not, I repeat, did not take out that. Rolled over. Now you're trading right back at the same price you were when you got the news. So there is no continuation, right? That's not continuation. That is chop. That is range bound. That is difficult trading. Okay? So that's where we currently are setting. Longer term, we are still in an area where the dollar could roll over. However, it's just continuing to go, right? 1, 2, 3, 4 straight weeks of bullish price action. We took out a massive weekly level this week. Now, obviously, we haven't closed above it just yet, but with 1 day and 10 hours left in the trading session, or on this session, the weekly session, it does appear as if though you are going to take that level out. So, could it be a bull trap? Yeah, it could. You haven't tested the 21 just yet on a weekly basis. So in the near term, this near term trend that you currently have, one could argue that you're still in it, but you have taken out your yearly opening range, which means that now on the yearly, you're bullish. So we're just kind of waiting for this to make a move. You can see that you're not really getting any expansion on the quarter. Looking next to last Q4, this thing looks terrible, right? So you can see that there is a clear quarterly supply zone there, and it just simply comes in line with the 21 exponential. So we'll see if we can get a weekly closure above 104.77 this week. If we do, then next week we'll be waiting to see, or the next week or two, we will be waiting to see if we get a big bearish candle back out of the area, or do we get more bullish continuation? If we get more bullish continuation, then I will manage my dollar short position. All right. Remember, I'm short from up here, right there. So this is still trading very far away from my short entry. I do not have to worry or sweat this just yet. I haven't lost that much unrealized P&L with this move up. And to be honest with you, this isn't a whole lot of bullish momentum either. That was a nice bullish engulfing. If you want to look at, like I said, depending on how you look and identify trend, some people would say this is still in an uptrend. If they're looking at the weekly 200 or something like that, then you would still be in an uptrend. It just depends on the way that you identify trend. The way that we identify trend is we use objective levels, right? We're at a new year. This is 2023. So we look at where are we in correspondence with your yearly opening range. Right there is your yearly opening price. So as of right now, currently, you are up on the year. Can you maintain that bullish pressure? We shall see. You did, in fact, liquidate that high right there. So as far as the dollar needing to continue to push higher, you do not. You can clearly see if you look left, you do not have any other weekly highs to liquidate other than this one all the way up there. So, I mean, if we start closing weeklies above this swing high, this will be the next bullish target. And that's just the way price works. Now, on the smaller time frame levels, no, you don't. That's the same area. It's the same price. So, I mean, literally, you've liquidated all you need to liquidate. So the dollar can start to roll over at any point in time now that it has done that. Even on a daily closing basis or on a daily liquidation basis, your next daily high to liquidate is 105,631. Now, are there smaller time frame levels in there or smaller time frame swing highs? Not on a 4 hour. No, there isn't. All the way down to a 2 hour. I mean, literally, there's nothing. There's this swing high there. That puts you a little bit closer, but still well off of where you are currently trading. See? So a big breakout is what you would need to see for these two areas to be future bullish targets. Now, the short trade that I was looking for to happen on the USD/JPY from the other day, because you did the same thing, you did liquidate that area. I did want to see this start to roll over, but with the news that the bond news that JPY came out with the other day, that made the JPY a little bit weak. And with today's bullish dollar news, you can see there that you've gotten another push higher. But on the small time frame, on this near-term chart, it does look like you are putting in what is usually called a 3-drive topping formation. It is also known as a distribution model. So there is a pretty good chance still that this thing rolls over if it's going to stay in line with the current trend. Current trend on the USD/JPY is down. However, you are up on the year and you've been trading up for 6 weeks straight. So yuck, right? That's all I can say about that. Yuck, yuck, yuck. The longer it trades above this yellow line, the worse it starts to become for my short position, which is setting right there at the top of that wick, right? So, yeah, pretty significant move off the lows. There is monthly support down there, so we were expecting that kind of, sort of, right? We were expecting a bounce. You have taken out last month's high, so the next monthly liquidation zone, 138, 175. Is there enough strength left in the asset to push up to there? We shall see in the next coming days. So, in the next week or two, we're going to see either a breakout pretty much confirmed on the dollar as we look for higher dollar prices as the Fed continues its rate hiking cycle, or we are going to see that overall trend resumption back to the downside for the dollar, and we will see asset prices return to moving in the upwards direction, at least until it finds enough supply to put it in a sideways, choppy environment. We're not getting continuation, really. But like I said, if you were looking for positions on the S&P 500, you've been trading there. You traded there for 2 days. So now is not the time to be taking long entries on it. You had multiple opportunities to do so. The problem with this would have been obviously figuring out where to get the stop loss, because you had stop out after stop out after stop out before you finally got to move higher. It makes it trading difficult. You can see that you are starting to get that bearish move based off of that 15-minute resistance. That's just the way price works, folks. I mean, look at that. When you can't find one on the hourly, you can drop down to the 30-minute. We still didn't have nothing in there, so we dropped down to the 15-minute. There it is, all right? All we're looking for is we're looking for that shift. We're looking for that different candle, because that signifies change. What change? Position change. So your shorts would be taking profits here. People would be getting long here for whatever reason. In this impulse leg to the downside, you had an up close candle. Those are the areas that you look for potential resistance. So that probably means Bitcoin's coming off now. It is. So like I said, we needed a retest of at least that to get into that short entry. We did not get it. Did not get it. But I was looking for the move to be faded, because the news that we got this morning was bullish for the dollar. So, yeah. If the long-term big wallets decide to take profits, as you said on Twitter, we could see a big retracement that could bring Bitcoin back down to 20K maybe. Yeah, absolutely. For sure. Yep. If people if people decide to sell all their Bitcoin, you're going to see come off a lot lower than that. But I don't think people will. I mean, I think the majority of the people that are still left in Bitcoin are going to be in Bitcoin the rest of their lives, right? Because they believe in the asset enough. That is it is the most volatile asset class out there, pretty much. So, like, most people don't, like, most of your investors, they're not going to be, like, holding an asset that can have 10 or 15% swings in the span of a day. That's typically not where you want to keep your money. But ultimately, we think that we've seen the bottom on Bitcoin. That's where we stand. I don't think that you're going to see 16,530 again, but you could, right? You could. There's nothing that says that it can't happen. Absolutely. We don't want to see that happen. No, we do not. We would love to see this thing find support, give us a beautiful entry, and rock on up into 30 and 40 grand. That's what we want to see, but how likely is that to happen this year? Well, with everything that we know about inflation and the joblessness and all that, it's probably not very likely, unfortunately. So we're going to trade the chart that we have in front of us. It's that simple, right? If order flow is bearish, we're going to look for intraday shorts. If order flow is bullish, we're going to look for intraday longs. That's how we do it. That's how we do it, baby. So yeah. Um there's daily support here on Bitcoin, and that would put you under yesterday's swing low. I don't know if this daily support will hold, obviously, but you're also going to come into your 21 exponential there, and I'm on the wrong chart. I need to get over here in order to pull up the RSI just to see where it currently is setting on the daily. You are still setting in bullish territory. So as long as you're sitting above the 50, we do typically look to take longs, but we can't take longs until we get into support. And you're not into support. You've lost support, right? And since you lost support yesterday, today is why we're looking to fade any bullish move. But more than likely, that trade has already occurred. You're coming up to 10 o'clock in the morning. There are some traders out there that like to trade later in the day. I am not one of them. I find that for my success, I find better success from 7 to 10 in the morning. When I try to take trades later into the session, like around the London close or, the Asian Open, I tend to get hurt more than I do good. So I stay away from those trading times. My edge is typically around or a little bit before the New York Open. And let's be clear, you're not getting that downside continuation that I thought you would get off of that level either. Got a nice downside impulse right there, but that was almost completely retraced. Another nice little downside impulse there, retraced. So ultimately, it's either going to break down or it's going to break out. If it breaks out to the upside, you're probably going to see quite the move. Because we know that most of today's volume is trading, it has been traded up in the $24,000 area. So typically that does suggest that shorts are in control of today's price action. So obviously, if you get a spike above all this, you're going to see a decent little squeeze up. You could even see it get as high as 25, 26K because you got a lot of shorts out there. I can't pull up the short float, nor do I care about the short float because, let's be honest, the market does what it does to hurt the most. And like if you look at IG sentiment, when I used to be able to look at the sentiment, most people are bullish Bitcoin, right? Most people. Usually it's like always up above 75% of people that are in Bitcoin positions are long. So, I mean, the sentiment gauge isn't really helpful for Bitcoin as a day trading mechanism, but it can definitely be helpful with other assets. Remember, as long as people are trying to short the tops, that can continue trends to go, right? Same goes for the downside. As long as people are trying to pick bottoms, you will typically see the trend continue in that direction. Typically because the market is in search for liquidity. And if there's more liquidity on the opposite side, or, that's where the market goes. Squeeze them out. Nancy Pelosi does pretty good. Yeah, she does. She does. We know why, right? We know why, but maybe if you could find her phone number, give her a text, ask her what she's doing for the day. Maybe follow her trades. Maybe Nancy Pelosi needs to start a YouTube channel. Right? Morning getting in late. Yeah. Yeah, I did start a little bit late because, like I said, there was a lot of news going on. And I just wanted to make sure I had a little bit of info to come on here live with. It's a lot better when I got things to say than when I don't have things to say. When I don't have anything to say or do, then it's just like we're just going to be sitting here talking to each other. And there's a lot of competition on YouTube. A lot of it, right? A lot of it, especially in the trading space. I guess the Inner Circle Trader guy is going to start doing live streams every day, and he does them at this time, and there's no competing with that man. He has almost 1 million subs, right? That's big, 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 big. Man has had a fantastic career as a YouTuber and a mentor. Let's see here. S&P 500 getting a little bit of a pullback off of that 15-minute area. You can see today's range is fairly small still. So I mean, getting down to the lows would be no problem at all. One good size 5-minute candle could throw you under today's low. And today's low just also happens to be the opening price, or pretty close to the opening price. So once again, this would be more suggestive that people are trying to buy the S&P 500, right? Because most of your volume is traded here. That's your point of control, 4,008. So 4,008 is where most of the volume's traded. So if that's where most of the volume's traded, price is trading above it, you can pretty much say that most of it is probably longs. If it's shorts, then they are stuck and price will trend higher. And I don't think the oil's inventory is going to have, crude oil inventory is going to do much for the S&P 500. It'll definitely make oil move around a lot, but it's not going to do a whole lot for S&P 500. Oil's having a pretty good sized day today. But you can see yesterday it had a big day to the downside. So retracing a lot of that move. It's definitely trading in a range here. You can see the bottom end of support. You can see your yearly open. 2023's opening price is right there. So you are under. I mean, taking a short trade based off of the 2023 yearly open was a phenomenal entry, as you can see in hindsight there. Like I said, ladies and gentlemen, objective price levels. Those are your high probable entries, especially if it happens around the high probable time, which would be the London session or the New York session. We can go back and see exactly when that happened. 12 o'clock. So that was in the afternoon. Probably after a newsprint. Like, I don't know, inventories maybe. Getting a nice little spike today. You are trading into an hourly supply zone. Could act as resistance. Doesn't look like it is going to, but it could, right? We can't see into the future. We could look at this thing in 20 minutes and you could see a complete engulfed candle to the downside, similar to what we just seen on the other asset. What asset was that? This one. So I am liking this now. To the downside. Remember, I'm already short this asset, but I've been trying to find areas to help people get short if they want to short it. But if you have an opposite bias of me, if you think that the dollar is going to go higher because inflation sucks and the world's going to crash, then you're looking to buy support. The market's going to price something in and we just don't know what it is just yet. Order flow for the last several days have been bullish, but I am looking for a reversal in the next week or so. I am looking for this to get back under 131. But it's trading pretty good above that level. And you can see that you were starting to get momentum away from it, but the last several days you've lost that momentum. Now, granted, you did get a nice up spike 2 days ago, but you've just taken that out. So, literally, the next point of liquidations is 137.50. So, the market may start to look to liquidate these swing lows now. So, a good place to watch, if not today, but maybe like tomorrow, would be 135.10. Look for retests of that price. So you would want to see something like this take place, right? Let this thing come down, find support, maybe trade up, and then you'd want to see something like that, right? Tomorrow, not today. Of course, unless it gets back up there today and completely rejects. If that's the case, you got a beautiful place to work in a stop. But order flow is bullish. Just keep that in mind. Yeah, Bitcoiners not selling. Most of them won't. The ones that are still here, guys, those are your hardcore Bitcoiners. They're not going anywhere. They're not going anywhere. I expect Bitcoin to continue with its overall lifetime trend, which is clearly up. There is no debate in that at all. I don't care if you think Bitcoin is a worthless piece of garbage, crap coin or not. If you look at the lifetime data, this is a very beautiful asset to have been buyers of in each and every bear market phase. And looking at this monthly chart, it does look like you have put in a bear market low. And we did, in fact, buy that bear market low. So now all we're doing is we're waiting for the next area of potential support. $20,000, as stated earlier in the inside of the chat from a future legend, said around 20K. Yeah, we could definitely watch that area for potential long opportunities moving forward. I like it. But you got to wait for it to get back there. Can't buy 20K if it's not at 20K. Can we check Tesla, please? Yeah, absolutely. Tesla having a nice bounce. And looks like it's been consolidating the last couple days. You still have that unfilled earnings gap down there. But, I mean, we were buyers on Tesla. A couple times we tried to buy the liquidations, and those trades got stopped out. And then it really didn't give us a decent setup after, right? You kind of just gapped up and gapped up and gapped up and just kept gapping up each week. It makes it difficult to get positioned in it. So you definitely want to wait for a pullback before you start buying it. Now, if you believe in Tesla as overall like going to be a great company and you think the trend is going to continue, then you could be a buyer here. I mean, the all-time high is 100% move from where you currently are. But you don't want to do that with leverage. I think you should wait on a deeper correction. You will get a deeper correction, guys. All right? Price isn't just going to go up. It's not. If you come over here and look at this stuff over here, I mean, this is your yearly opening range on the US 30 year. Here's your 20 year. Yearly opening range acting as resistance. You are above the 10 year. You are above it on the 5 year, and the 2 year is well above it. The 2 years trading back at highs. I mean, and this is pretty much why you're seeing dollar strength, right? That's pretty much why you're seeing dollar strength. Let's see if bonds can get back up above the yearly opening range. I know junk was trying to get above it. It got above it, so that's nice. This is an area where I told people they could look to be a buyer on on J and K. If you would have bought J and K, you're up a buck 19. So kudos to you. The VIX was getting a nice move off the lows. We've already discussed the VIX in depth, why the VIX is probably not going to do this again. So if you are an investor and you think the bear market is not in yet because this hasn't happened to the VIX, you should go back and watch some of my older videos because you can clearly see capital did not rotate into the VIX during 2022's bear market. Right? I mean, here's 2022. Here's 2023. Roughly, right? Roughly. You did not get capital rotation into that. This is, you would have seen this thing moving straight up like it did over there if capital was rotating into the VIX. It wasn't. It was rotating into the dollar. This is why I think the bear market's done and over with, because you have essentially had a blow off top on the dollar. Now, this is capital rotating back out of the dollar into your riskier assets. Bitcoin being one of them. Look at the move up. Right? Now, it didn't move up exactly on par correlated with the dollar because of the FTX debacle. But if you wipe the FTX debacle off the face of the planet, Bitcoin's probably trading at $30,000 today, right? We probably would have already hit it if it maintained that risk correlation. It just took a while for that risk correlation to be priced back into the market. And we were looking for that correlation to be priced back into the market. And we got it within 1 week. Like the entirety of the pricing in happened in 1 week. Whoop, right back up. So, and you've gotten bullish continuation since. And like I said, that is not a terrible looking weekly. Now, here's the thing. There are some indicators out there that other folks are looking at, other YouTubers. Like, for instance, we got Crown looking at the Gaussian channel on a 5-day. I mean, I can find reasons to be bearish too. If you look at all the indicators out there in the world on every single time frame, you will eventually find a reason to be bearish, right? You will. It will happen. Let's give my shitty internet time to catch up. Boom shakalaka. So there you go, right? Yeah, it doesn't look great. And to be fair, this thing did do pretty good job at calling some highs, but this was a yearly open. This was a fresh yearly high. We shorted it not because of the Gaussian channel, but based on objective price. But yeah, I mean, it does pretty damn good ultimately of determining trend. Here's a spot where obviously it failed. Here's a spot where obviously it failed. There's a spot obviously that it failed. Here's a spot that it obviously failed if you were looking for continuation lower. So, I mean, obviously, if Bitcoin's going to continue higher, it needs to break out above all that. It just hasn't happened yet. And it's a 5-day chart. So it takes 5 complete days in order for this thing to have candle closures. I look at dailies, 3 days, and weeklies. I don't think you need to look at every single day. You know what I mean? I think you need to simplify your trading. I think most retail traders, most people that are unsuccessful at trading would have better success if they would just simply make it easier on themselves. Stop trying to find that golden nugget out there. Stop following. I mean, you can follow whoever you want, listen to whoever you want. I don't mean that, but just understand that each and every single YouTuber has a different strategy, a different method of claiming to be profitable. But most of them are also selling courses and mentorships and stuff like that. Right? So, profitable? Yeah. As a content creator, very much so. Crown actually was an ex market maker as far as I know. Like I don't have physical evidence of it, but there's quite a bit of stuff on the internet that says that he was. So if that's true, then he knows how to trade. I just don't like using a ton of indicators. I don't think you need to, is all. Like I said, you can look at this chart and see what's been happening and in the direction that you probably more or less should be going, unless you get some nasty breakdown candles like this. Then obviously that changes things, right? You can look at the 21 on the weekly. As long as you're trading above that, you're overall bullish. You're not looking for bearish entries. If you want to try to catch the tops for bearish entries, you're late, right? That trade was 3 days ago. And there's a simple strategy called the liquidation break that I got on the YouTube channel. If you want to go check that video out, it's like 5 minute long, where it shows you just to wait for the liquidation to happen before you even take the entry. Like here, wait for the liquidation to happen, get short. We took that trade as well, right? There's liquidation, short it, boom, done, golden. But it's not going to be profitable over time if you get into a trending market. In a choppy sideways market, it might do good. I haven't never tested it in a choppy sideways market, or on Bitcoin for that matter, because Bitcoin generally is trending. It does a lot of trending. It does have periods where it is choppy, but overall, this thing is generally moving in one direction or the other, and very rapidly, I might add. People just do not have patience, is all it boils down to, roughly. That's not a bad looking weekly candle. Do I look at this weekly chart and think, oh my God, this is bearish? No, I do not. Bitcoin is bullish on the year. You're up almost 50% on the year. Yeah, you're up 45% year to date. And year to date is how you should trade, always. You should always be making financial decisions from a year to date perspective, not from a what happened 5 days before the year ended, because no one cares about the past. We only care about the future. So this is the chart we're working with, right? And as of right now, that thing is bullish. So until proven otherwise, and there's a couple different methods that you can use to prove otherwise. You could fib this range from yearly open to current yearly high and look for entries in this area here. 50% retracement to 618% or to 702, whatever you want. But anything under this would be looking a lot more bearish, because generally your retracements, you want your retracements to kind of mirror image the actual trend itself, like perfect measured moves. You see what I mean? Like if I go from this wick high here to the low, there's the low, and then go, here's your retracement to that high. We can make it a little less steep. Did you get a measured move off of that? Yeah. I mean, you pretty much did, right? Boom, boom, boom. So that's typically what you want to see. Overall trend dynamics. But when Bitcoin gets going, especially in a very hot FOMO market, you very rarely ever even get a pullback to buy. That's why I've been so adamant since this candle here of telling you guys to stop being bearish. But everybody else out there was telling you to get bearish, stay bearish. I mean, there's literally one guy out there that told you to short like here. And I made fun of it kind of by putting a tweet out talking about how professional traders were selling here, and retail traders are selling here. Right? Because typically that's how it works. You see all of this and you're like, no way is this thing going higher. It's going to zero. But nah, there's a lot of value in owning Bitcoin as a store value. I hold quite a bit of it now. But ultimately, we believe the bear market low is in. It could end up not being in the future, but as of right now, it does look like it's probably good to go. Good to go. I appreciate you and your style. Sure, there are many channels. This is the only channel I look forward to going live, learning each time. Cheers and keep being you. Yeah, I'm never going to change. Not going to change. I'm doing it to try to help. That's all I'm doing, right? It's not a business for me, so you're not going to see me with a big shocked face anytime on a thumbnail screaming about highlighted letters and stuff about make $1,000 a day just by doing this or stuff like that. Yeah, you're not going to see that from this channel. Because that's all horse shit. Pardon my French. It's all garbage. It's all designed for one thing, and that's to get clicks, to get views. YouTubers make quite a bit of money when they get lots and lots of views. And if they can consistently pull 40, 50,000 views each time they launch a video, they're making mad money, guys. Mad money. Millions by the end of the year. Just on views. Let alone courses and everything else. They're doing pretty good. That's why they do it. That's what they got in it for them. They don't care about you. I care about you. I want you guys to do this and to be able to do it yourself and to change your own lives. But it's going to take a lot of work because it's not easy. It's one of the most, it is going to be the most difficult endeavor you've ever set upon. It is one of the highest failing rate things out there, right? Investing is typically where it's like owning a restaurant in the U.S. Owning a restaurant is the number one failing industry because everybody thinks they can cook, right? Everybody thinks they can cook. You might be a great cook. You might make great tasting food, but getting a lot of people to come eat your food consistently, that's different. It's completely different than cooking for your mom or your dad or your family, right? Trading's the same way. Mostly it's you versus you. And it doesn't help that the market plays a lot of games itself. It lures me into sometimes. I get caught up in the minutia sometimes myself. Like since I started taking live trades and trying to find live trades for you guys, I've done things that I shouldn't have done. And those days so far did not end up pretty good. So we're not going to do that anymore. If there's not a trade to take, I'm not taking it. I'm not forcing no more trades. because I don't like closing out the week red. I despise it, in fact. Absolutely despise it. I would rather not trade all week, go in to start the next week neutral instead of closing out a week red. It does seem to be forming a little bit of hour resistance here, but it's pretty choppy. I would have expected that you would have already seen a run below the lows. So maybe it's getting ready to go here. But once again, this would be your intraday hourly resistance. Whenever I refer to intraday resistance, most of the time it's going to be on the hourly time frame. You won't get a 4-hour resistance until 13 minutes. But that's why I was using this candle up here, because it's already closed. It's already set in stone. We've already moved beyond it, pushed past it, and set this low down here. Now, we did take out this swing low here, so the next swing low target would be there. Nope, it's there. So there is a swing low target down here. But can you justify the risk to reward for that? And also, remember, you got support here, potential support, and potential support there. So, I mean, that's your high probable area from there to there, not from here to here. There's nothing that says it has to go there, other than it hasn't been liquidated yet, and it probably will be, but there's nothing that says it has to be. Let's go, says Will Smith. I loved you in that one movie, bro. This week could still close green. That would also look real nice. That's true. It could. I've seen I've seen it happen. Bitcoin can get really volatile really fast, man. Really move. Look at this thing. Look at that beast of an hourly candle. I mean, that's a beautiful looking thing, especially if you got in like here, right? And then woke up the next day and seen that. You were like, I'm the best. I'm the best, boy. Who the best? I'm the best. People tend to forget about all the other times where they lost money. It's the 1 or 2 times they made money. Those are the reasons why they keep trading Head and Shoulders and cup and handles and shit. They forgot about all the times it didn't work. And look at this beautiful Head and Shoulder, inverse Head and Shoulders here. I mean, you do not get no prettier than that. Right? Head and shoulder. Right here. Shoulder. Well, let's just use the brush, man. Come on. Shoulder, head, shoulder, neckline. You were waiting on this breakout, and your measured move puts you up here. Right? There you go. Oh, damn it. It didn't work. So let's forget about let's delete this one. This one didn't work, so let's delete this one. We'll try the next one. You gotta remember all of the trades, not just the ones that work. You got to get your equity curve moving in the right direction, which is up. And it's not because of head and shoulders patterns or inverse head and shoulders patterns. It's not. Trust me. But yeah, as of right now, that could be a legitimate target. I just would have liked to seen some momentum. You're just not getting it. You're just getting choppiness. Look at these things. They're barely moving. 0.3, 0.07. This is pretty much unchanged on the day. 0.17. Oof. Oof. Oh. Yeah, Bitcoin's probably next. Ugh. It just seems to have lost its correlation. It doesn't move as correlated as it used to. Ever since FTX, it's been basically trading under its own merit. But what a trade off that 15-minute level, right? Off the SPX. That's not a bad little short. And it's an objective price point. Easy spot to define your risk. You can easily see a 2-to-1 risk to reward from that. We don't never know what's going to happen when we enter our trades. None of us do. None of us guys that do this for a living, we don't know. When we take an entry, we do not know if it's going to work or not. It either does or it doesn't. We do not lose sleep over it if it doesn't, because we know over time it works itself out. So yeah, if Bitcoin would give us a nice pullback up to that hourly res, we could take a swing at it. I don't see nothing else to justify a stop loss, though, that I like. Right there, we could potentially watch that. So let's watch 24050 right here. Let's see if we get a push up to that and a failure. If we do, we can throw a we can throw a stop above this bullish candle's wick. Since this is the bullish candle that's basically making us take the trade. Like that. And we can get a 2-to-1 risk to reward out of it. Support would be there, right? Ultimately. Because that's the lowest close that you've had today. That would be the operating range. And then if we get a push lower down into the 23537 level, well, then we will be situated nicely for that. But you can't take it where it is now because it will directly screw this entire trade up. Right? It's got to be here. There or higher. But not too much higher, because it's too much higher, then it starts to look like something else is going on. So let's see. We'll throw us a little alert here. Let's see if we can't catch us a quick 2-to-1 here. I opened my restaurant 15 years ago and can attest to that. The first 5 years were rocky AF, still cooking lunches daily. Good for you, man. Hey, I love to see success. I am not against success. That's why I live in America. That's why I think America is the best country in the world. America does not care how much money you make as long as you pay your taxes. So, and you're doing it legally, right? If you have a legal business, you can make as much money as you want. Obviously, they want their cut because, we're ran by gangsters and extortionists, being the U.S. government. I'm kidding. YouTube, I'm joking. It was a joke. Gotta pay taxes. But yeah, I love to see successful. I like eating at successful restaurants. I eat at many of them. We eat out more than we do our own cooking nowadays, especially because, like, have you seen the price of a dozen eggs lately? Publix has these little meal packets mixed up for 2 or 4. Like, they serve 4 or they serve 2 dinner kits that has all the ingredients you need in order to make the entire dinner already packaged up. They have one that is chicken tikka marsala. It's one of my favorite Indian cuisine dishes of all time. If you've never had chicken tikka marsala, you don't know what you're missing. It is so good. And I was looking at it. It was $19.99, and that was for 2 pieces of chicken, a little bit of sauce, some rice, and broccoli for 2 people. Enough for 2 people. $20, and you have to cook it. Well, I can order that from an actual Indian restaurant for $20. You see what I mean? And it's already prepared. So we've been doing a lot of eating out lately. Food prices are terrible. Everything is terrible. I'm glad the gas prices are lower, but everything else is more expensive. And gas prices are still pretty up there. But I don't know if they'll ever go back down to where they used to be. It could. We just need to ramp up production. More supply means lower prices. So if we ramped up that supply, we could get the gas prices lower. So let's see. Bitcoin playing the choppity chop chop choppity chop 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 game here. Not doing anything. Ultimately, it almost looks like it's waiting on something. There is no other high pressured news event coming out. Maybe if I looked at 2-star events too. Yeah, you got Bostic speaking. Well, they've already spoken. Yeah, nothing. 7-year note auction. Nothing really. Nothing that I could see that would be the reason this thing trading sideways like that. All right, so here we go. Let me get over here on Bitget so I can watch the price on it, as well as Bitget is the exchange that I use. There is a link in the description for non-US residents. If you live in the US, you will not be able to use them, unfortunately, but for you non-US users, if you want to try Bitget, they do offer the cheapest fees than any other crypto exchange out there. And you can trade the inverse swap contract, so you can just trade Bitcoin with Bitcoin. It's a fantastic tool. Make sure you use affiliate code XTSC. That is X-Ray Tango Sierra Charlie. XTSC. And thank you in advance. So that price for that same 30-minute level would be 24,046. Like I said, I'm not going to play games with it. I want to see an absolute rejection there. I do not want to see us getting up into here or anything like that. I want to see it trade to it and then instantly reject from it. It is a little late in the day. It's 11 o'clock. But as long as these things are continuing to move lower, which the US 30's back to being green on the day, S&P 500 looks to be retracing a little bit. I can see Bitcoin ultimately moving lower as well. But it's got to get up there, because that's where the risk to reward is. Beardy says, what do you think about VR, VP, and POC, the market holding at a zone to fill inefficiencies? For inefficiency, I would almost need to know what YouTuber you're talking about, because different YouTubers have different definitions and descriptions of what an inefficiency truly is. Most seem to call inefficiencies areas where you have rapid expansion to the downside, like this candle here, where it's a rapid expansion lower. If you haven't traded back to it, they call that an inefficiency. I don't know if that's what you're talking about, but there are none in this price action that I see, right? Because you have to look here as well. You can't just look at this one candle and say, well, if I put this line here under this wick, you can see how price did not return there. So therefore there's an inefficiency, because price did trade at that price. It did it here. And you can see right there, price did return. So, I mean, I don't know what YouTuber and what definition of the term inefficiency you are talking about. So I really can't talk about it. When I used to use the term inefficiency or would say that there's a slight inefficiency, that's what I would be referring to. But that's only if price had never traded there before. All right. And there's only been a couple examples of that happening in Bitcoin's history. Only a couple. I'll show you one here. All right, so when Bitcoin was trading here, it made two gaps to the outside. This gap right here to there, right? So that is what some YouTubers would classify an inefficiency. But this wouldn't be an inefficiency because from price 18415 to 19080, volume traded inside of that inefficient zone. It did it right here. Okay. So like price traded here on this day, you got above 18415. You can see the high of that candle is 18880. The high of this candle is 19970. And then ultimately the high of this candle, well, just this candle alone right here takes out this inefficiency. So there was volume that traded inside of that. Therefore, this was not an inefficiency. It was a gap, but it was not an inefficiency. This was an inefficiency, and this was my bear market target because price had never traded there. Okay? So on the CME futures, what I mean by that is if you look left, we know that above $20,000 or above this wick here, which that price is what? $26.50. So we know price had never traded at all above $26.50 ever until this stuff right through here. So from 24,505 to 24,605, there was an inefficiency in price here because price never traded, any volume ever traded at that price in between here. Now it did on the spot market because that market's open 24/7. But it still left an inefficiency there because you had a rapid expansion. So let's write these prices down. So we don't forget them, 24,605 and 24,505. So exactly a $100 inefficient zone. Go back to the spot market. And find those prices. 24,605. So it's going to be this whole candle here. Right there. So one could argue that from here to here, was an inefficiency, because whatever volume traded in this was light, thin, if you will. Right? We can even see how much volume was traded in it by turning on the volume profile. If it'll give us the numbers here. It's just my internet's terrible. Oh, I guess it's only going to give the volume to me here. That's as far back as it's going to give me the volume. Using volume profile any other way, I also think is incorrect. So like using fixed range volume for that, there's literally no edge to doing that. But that was the inefficiency there. So that's why I had a target of that. And you can see we breached into it here. And then we blasted through it there. Right? And then my bear market target was over after that. But you can see also here, that's also your August 2022 high. So one could say that you still do have a little bit of inefficiency up there, where there just hasn't been much volume traded in that area. But that's as far as I would take inefficiencies. Looking at this as an inefficient candle, I mean, it's like gaps, right? It's like the only reason there's even gaps in the CME chart is because the CME closes. That is it. That is the only reason. If the CME didn't close, you wouldn't have gaps, period. There wouldn't be any gaps. And that's why when we analyze the SP 500, instead of using the regular SPX, which is the actual index, you got gaps. That's why we look at the CFD instead, because it takes those gaps away. Now, I could look at the ES minis, and that will also take out a lot of the gaps, but you will still have gaps. The only reason there's a gap is because the market closed. But you still have pre and post market trading that occurs during the Asian and London session. So literally, there was no gap, right? Like when you see how the market trades 24 hours, there's no gap. It's not there. It's irrelevant. So hopefully that clears that up for you. Instead of looking for gaps to fill, just ignore them. Ignore them. I do know that sometimes they do fill. I know this, right? I'm not saying that they don't fill. I'm just simply saying don't trade looking for that to happen. If you're looking for entries and you're on the right side of the market and it's heading to fill the gap, I wouldn't even use that as a price target. I would make my price target inside the previous day's range. And then if you do get continuation to fill the gap, then you could take profits again or something like that. But I wouldn't build a strategy around it. It's useless data. It's useless info because we know that price did trade here. Because all we have to do is go to the spot market and we can see it. Right? We probably watched it. We were probably, even though we were sitting at home and it's a Saturday, we were probably watching this candle the whole day with a laptop open, sitting right to your right or to your left or on your phone while you're with your family. Probably watching that happen, FOMOing into it or something. But so volume traded through there. I don't incorporate it into my strategy anymore. I used to talk about them a lot, but I designed the channel specifically to simplify it for you. Like your main objective, the hardest thing that traders have to find is directional bias. And for the time frame or the time period that you're looking to hold the position. Those are the two things that you need to distinguish right off the bat because you're taking a position based on a bias that you have. So the best thing that you need to do, and the hardest thing to do, is to even identify trend. There's a lot of YouTubers out there that they can't even correctly identify a trend. You gotta be able to identify directional bias, trend. And there's the best way to do that is this right here, monthly, quarterly, yearly. Because that's what investors are working with. They're not working with what happened in 2022. They're working with data that's being released in 2023. They are investing based on their outlook for 2023, not based on what happened in 2022. If you do that, you're going to fail. So you need to be looking at the markets the same way professional investors do. You need to look at that and that way. So first and foremost, one of my number one tricks for you to identify bias, directional trend bias, is to click year to date and then make sure that it's all on the chart. That is your bias. That is your trend for 2023. That is what price has done. Therefore, that is the trend. So unless something changes in the data moving forward, for instance, the next FOMC meeting comes out and Powell says, oops, we forgot to look at this one piece of paper and now we looked at it and it's bad, so we're hiking 2 full points. Well, let me explain some. That will change investors' outlooks and therefore change potentially the trend. Right? Because they're going to sell. They're going to sell all their risky assets and they're going to put their money in bonds, especially because they got a fixed rate of almost 5% right now. So 5% that's free money. It's guaranteed free money, 5%. And 5% on billions of dollars is a lot of money. It's not 12% or 8 to 12%, which is what in a normal uptrend you can yield on the S&P 500. That's why people even do 60-40 portfolios and stuff like that. Like when you sit down with a risk manager or a money manager, he's going to ask you, how do you want to allocate these funds? Do you want to allocate them more to a safe, like structured, guaranteed money? Or do you want to put 20% of the funds into high risk stocks because they generate more alpha, but you can also lose more money if they're going down, yada, yada. Like that stuff is what moves the markets, not a Head and Shoulders that happened in 2022. All right, so tip number 1, year to date, that's how you identify trend. So right there, you know, as long as you're in an uptrend and you can use indicators to help you, I have no trouble with that at all. No matter what, find your yearly opening price and mark that with a line. There's January the 1st, 2023. Mine will always be yellow. So if you see a yellow line on my chart, then you know that is the yearly opening range for that year, 2023. If you need to draw a trend line, you can do that like that. Boom, there's your trend for 2023. You can use the moving averages. But if you're going to do that, do it on a higher time frame, not the daily. Or if you're going to do it on the daily, then you need to look at more than just one, right? If you're going to be looking at them on a daily, look at these 4 right there. I got 5 up there, but just, this is a 30 simple, that light blue. Let's get rid of it because you don't need it on a daily. The 30 simple is good for weekly analysis. Okay? So, are your moving averages structured correctly to identify an uptrend? No, they're not. Why? Because the 100 is under the 200. The 200 should be under the 100. So as of right now, there's just not enough data for you to make a directional bias trade or play on this until you get this 100 above the 200, the 20 under price, the 50 under the 20, like the Dow looked, right? The Dow looks completely different now, but that's what you want to see for trend. Yellow above the green, green above the blue, blue above the purple. That means on a daily closing basis, you were in an uptrend. Yearly, year to date, remember, on a red candle, you got to use the opening price. The up is the top, not the bottom. The top of the candle. If you're so new to investing and you don't understand candles, I have a video that explains candlesticks simplified. I don't go into hammer candles and Thor candles and 3 white crows and 4 black acids and 3 banana peels and all that stuff, gravestone and whatever. No, there's 3 kinds of candles. You have inside, outside, and trending candles. That's it. They don't make any other kind. It's either a trending candle, an inside candle, or an outside candle. So, identify that. You can see here's your yearly opening range. You were bullish for a little bit, then you were bearish for a little bit, then you were sideways for a little bit. Now you're breaking down and you seem to be getting a little bit of momentum away from it. That's not looking so hot for the Dow right now. So is this in a trend? No. What is it? It is, there's the top. That's your highest closing daily bullish candle. Therefore, that is the top of your range. Here is your lowest closing bearish candle. There is the bottom of your range. You are in a range for 2023. You are not trending on the Dow. So you would approach this asset differently than you would approach, say, Bitcoin, because this asset is not trending. But you can also see why yesterday you got a bounce, because you traded to the objective support for 2023. Okay? Simplify it, guys. You're always going to be a buyer at the lows. You're always going to be a seller at the highs. That does not matter if you are going to be a short seller or a longer. It's always going to be the same. If you are looking for long trades, you're looking to buy support and you're looking to take profits, which is sell at resistance. And the same goes for if you're a short seller, you want to sell resistance and buy support to close the trade. So you're always going to be a buyer here. You're always going to be a seller there. Only this is a very big range. Is this a high probable range? Well, yeah. The market has set it. Would that have been a good spot to be a buyer? And this is after the fact. Delete the data. Back test the stuff I'm telling you. Okay? Don't take my word for it. Go back in time. Back test the stuff I am telling you. Support. Resistance. This is the open. We don't care about anything else. This is the only data we care about. So, are you in a trend here? No, you are not. Absolutely not. You are sideways. There is your lowest closing daily candle. There is your highest closing bullish candle. That is your range. You buy 32,944. And if you're lucky and price moves higher, you know you want to sell at 34,307, because this is the probability, or this is the range. Play it out. Up, boom, you took profits. Now you move your stop to break even, and then you leave whatever profits, the amount of profits that you want. Just make sure you close down enough of the position so you are sitting in the position with unrealized profits, but you also made money. So now the only thing you are risking is unrealized P&L. You have zero risk on the table. You are now riding the trend with the bank's money, right? Your money's done. Your money's out of there. You cannot lose money on this trade any longer. You have zero risk on the table. Move that stop to break even, and then hopefully, because hope ain't a strategy, right? You can't base it on hope. Hopefully you get bullish continuation for years to come. For the next 20 years, hopefully it continues to go up, because that's just going to generate consistent returns, and it's all free. You have zero risk in it. Now, you won't make as much, obviously, as the amount of money that you took the initial position with. But this is also with leverage. Like, this only applies when you're using leverage. If you're using spot, then there's really no point to take profits and all that. You're investing to hold the asset for a long time anyways. But if the market doesn't break out and trend, ultimately it comes back and stops you out. Well, you can try it again later once either a definitive trend starts to break out, whether it's to the downside or to the upside. So like if we continue to break down here and we get bearish continuation, and then that moving average flips and changes and starts to rotate downward, and you get a clear and obvious trend for 2023, and it's trending lower, then you know you're going to be looking to sell resistances until either you become back in a range bound scenario or whatever happens. If the market ends up becoming bullish again, then you change your bias. Let the market be your guide. Let price be your guide. It's a nasty looking weekly candle on the Dow. It literally is. Like, that candle looks like crap compared to Bitcoin's weekly. So we have to keep that in mind. So like the move we're seeing on the Dow, maybe Bitcoin is lagging the Dow. Maybe Bitcoin looks like this right now and closes like this right now. Maybe next week Bitcoin will look like this. Right? We just have to wait and see. Do buyers step back up here again? We know they did in the past. We know they did in the past. And I can do you one better. Here is 2022. Sorry, I keep saying 22. 2023 low of year. So if you break down, close the daily below this, then do not look for bullish entries on the Dow until you set a fresh, brand new 2023 low. Then look to see, does it get back above this original support? Because if it does, then this was nothing more than a liquidity run on this yearly candle. It may just be going down there to smoke that low, and it could turn right back around and start moving right back up again, as that's typically what markets do, right? They move side to side, they oscillate, they liquidate, they purge, they take. The market's not trying to give you money, right? It's trying to take it. It's up to you whether or not it gives you money or not. There is your 2023 high. Boom. Are you trending? No. S&P 500, yellow line, year to date. Do not care about one day before that, because this is a new year. Right there. Same scenario. This is what you're working with. Right here. course, I do not want that line yellow. Get rid of that. Now, there's several daily supports through here. We've lost this one and this one, so this is the next one. It could ultimately find support here, or on a weekly time frame, you're in an area where it could ultimately find support. We don't know if it will find support here or not, but it is definitely a level that we are paying attention to, because this is an area where the higher probable setups will be. These are your this is high probable trading, higher probable than anything you're going to find out there. And you don't need to know what an order block is. You don't need to know what any of that garbage is. All you need to know is it in a trending environment? Or are we in a choppy environment? If it's trending, then you want to look for entries in that direction at support. Are you going to lose trades? Yes, you will. But one of these times you're going to nail the perfect entry, and you're going to ride a trade like this. This is literally my entry on this trade, and I am short. That is literally my entry on the USD JPY. You go find a Twitter guy or a YouTube person that has a better short dollar position than me. And I didn't just guess and hope that that was the top. I waited for the DXY to liquidate the previous week's high, and then I took the trade on this asset. Because at the time, we knew the Bank of Japan was getting ready to sell dollars to prop their currency. So this was the trade that we were watching. That's the short entry. So if it does find resistance ultimately here, and it does end up getting back under 2023 open, and it does start to trend away and away and away for however long, I never have to touch that position again. I can set in this investment for the rest of my life as long as it continues lower. That's what investing is. You're either looking as a buyer to buy low and sell it higher for a profit, or you're looking to short the market. You're looking to sell it at a high price and buy it back lower for a profit. It's as simple as that. You need to identify trend. Now, you're still going to have difficulties because, like I said, you're going to get stopped out. You are going to identify good levels to watch for resistance. And sometimes those levels are going to hold, and sometimes they're not. So on the times where the levels don't hold, because the market isn't doing what it was doing or what you think it should be doing, either way, you have a stop loss to prevent yourself from losing too much money. That's your risk. That stop loss is your risk. So ultimately, it's up to you to define that risk. It's up to you to define how much money you want to lose on this specific trade. What are my objectives? Are you looking for a yearly trade? As I was here, I was expecting a trend because it was getting close to the end of the year. And I know that portfolio managers will make adjustments to their portfolios for tax purposes, for this purpose, for that purpose, you name it. Right? We were already into October here. So I took the short Because inflation at that point had been trending lower month over month, which is a good thing, right? And I seen capital rotating out of the dollar. I knew the dollar was where the money was. I knew the dollar is where people were invested, not the VIX, because I can see it on the chart. It was the only thing going straight up all of 2022. The only thing. Everything else wasn't. There was no other risk-off asset going straight up. It was just the dollar, bonds, or not bonds, but, yields. So we knew that this was where capital was allocated. So we were just waiting for a signal to short. And that signal came right there. Right there at 113,920. I stretched this out. You can see that right there. Boom. And I took that trade live, recorded. I said, I'm going to take a short on the USDJPY right now, right where it is. Because if this is a liquidity run and if my scenario is correct and we are going to start seeing the capital rotate out of the dollar, then I want to short it there. And it ended up being the damn near top tick. The same way we caught the Bitcoin short, both of them. We shorted at the top and we shorted the fresh 2022 high. Nobody else was talking about that stuff at all. People were calling me an idiot, a fool, a moron, someone didn't know nothing. And I'm literally just walking circles around them, running circles around them. People that bet against me usually end up losing money. So unfortunately, we didn't get to take our trade on Bitcoin today, but I am going to have to wrap this thing up. It's getting long. And yeah, it's just chopping. At this point, I mean, it'd take all day to get to our target. It probably ain't coming back. This was going to be our profit target. No, we were going to do it based off the 30-minute. This was our profit target. This was going to be our entry. So, I mean, you can watch these two prices if you want for the rest of the day. Look for bearish entries at 24,050. But if you hit 23,785 first, then that trade is done. It's over. You're not looking to do it again, right? Because we'll have new data tomorrow. New data means new setup, new everything. Just learn how to identify support and resistance, and trust me, it's real. You just seen it in that Dow example. There is such a thing as support and resistance, and the market does respect it. And you can take profitable trades off of it. I do it all the time. All the time. If you're new here, just hit follow or subscribe. Click the like button. You're going to learn objective ways to look at price, and I will do my best to keep you guys on the right side of the market. You just have to understand that this year, so far right now, with all the data that we have, I'm not the only investor, trader, market participant that's confused. There is a lot of us out there that are. We may know quite a bit about the marketplace, but the market is always right, not us. We let the market set the bias, and then we go from there. We let the market show us the way. Price is king. Let price guide the way. Now, if Bitcoin does find support, we'll look to take a long, right? Intraday, but ultimately, like getting in on a yearly trade, is it possible that Bitcoin goes all the way back down to test the yearly open? It is. It's just unlikely. And thank you for becoming a member, Beardy. Welcome to retail. I appreciate you, my friend. I appreciate all of you that show financial support. It's not needed, but it is very, very, very much appreciated. As always. Bitcoin's just being choppy. Ethereum is up. Look at that. Bitcoin's down 1.19%, and Ethereum is up 0.6%. And I only look at moving averages on the daily and weekly time frame. Right? That and RSI. That's it. Those are the only indicators that I truly care about. Occasionally you'll see session volume profile up or something, but I'm not making trading decisions based solely off of that stuff. Mostly it's because of what price is doing and the direction it's going. Right? Like I probably would have been looking I probably would not have been looking to short Ethereum because Ethereum has not closed below support yet. But it did absolutely reject at supply also. So those are two very relevant levels for day trades, potentially. Moving forward on Ethereum, it didn't get an exact rejection, but it was close. Ethereum would probably be the better short. If Bitcoin is going to have a continuation lower week, then Ethereum might also, right? So Ethereum might actually be the better trade. On a weekly, Ethereum has already tested the 50 spot on the RSI and bounced. So looking for shorts might be the wrong idea as you are up on the year and trending. You are currently up and trending. So until that changes, we should probably keep looking for longs. Like I said, eventually if you get a trend change or something like that, a directional shift in the overall market, we will be wrong. We will get stopped out on trades, guys. I don't win every trade I take. I just manage the amount of money that I'm willing to lose when I do take these trades. Right? And that's what separates me from being a losing or winning trader is the amount that you risk. You got to be consistent. Very consistent. I don't like that weekly level, like as far as looking for longs right here. It is old resistance. And then like also you have that demand there, but I don't like the bigger candles. I don't like to use them for demand or supply candles when they're that big because typically this could be a fake out. This entire bullish candle here could eventually be faded in the next 2 to 3 weeks. Just because it didn't get faded this week doesn't mean that, like I said, next week won't. The Dow looks very bad, and we look at the overall market. As long as the dollar has strength like this, I mean, it's already liquidated that high multiple times now. So the fact that it's doing it again. See this? You liquidated it then you liquidated it then. Like, the fact that you're doing it again, that means it's trending. So you don't want to look to short that just yet. This thing is still moving to the upside. Order flow on the dollar is still bullish. So people are still putting money into the dollar. And that will and can change the overall risk dynamics that are at play right now in the risk markets. So your high flyers, the ones that were like doing really, really good at the first quarter 2023, if they're looking for tailwind risk, they will short them. They will sell them. They will get out of them. They will flow into that safe, free money. That's what their job is. Their job is to protect their clients' funds. Looks like you're going to get a fresh run of the year right now on the Dow Jones. A fresh low of the year. If you get a slight wick below that and a rejection right back out of there, that might not be a bad place to be a buyer. Just make sure you're using a stop loss and you're not using a ton of leverage. Because like I said, the dollar is trending away from and above its yearly opening range. But this is also the reason why I'm kind of looking for short entries on Bitcoin and Ethereum right now. If you get downside continuation, like if you keep making fresh low after fresh low after fresh low, then you're going to wait for the next bullish bounce and you're going to look to be a seller. I told my members this morning that bullish move on Bitcoin would probably get faded. And it was this bullish move right here. And it has been or is getting faded right now. It's just taking all freaking day to do it. All day long. But it is trending that way. And then these big spikes like this, that's just random market violence. Finding where these spikes, like if you know or you have an idea that it is going to continue lower based off of the reaction it had here, like this is the type of reaction I want to see on the Dow Jones Industrial. After making a fresh yearly low, I want to see it put in a bullish candle that looks similar to this. Right there. After taking out that low. If that's the case, then I'll probably stop looking for shorts on Bitcoin. But if the Dow Jones continues to put in lower low after lower low after lower low, then we're going to be looking near term to short these bounces in Bitcoin. until the trend changes or shows us something else, or finds support and holds support for multiple days. Can't keep this damn thing lit. But here it goes, moving straight into our target. So that's no good there. So this trade is a wrap. It hit our target. That's close enough for me. I would be taking profits right now. So if you shorted it, take profits right now. Move your stop to break even. Because there it is. That was the goal. And it has been hit. So we don't want no more alerts there. But I'm going to go ahead and wrap it up. I am going to be watching the Dow for the rest of the day to see what it does down here. Obviously, the S&P 500 is going to follow the Dow. The news that we got today was bullish for the dollar, so you're likely to see bullish continuation. So please don't try to short the USD JPY just yet. We need to see that thing slow its roll for sure. I don't see any other reason for it to go up. As far as for liquidations, it's already gathered. But maybe it needs more, right? Maybe it's building and building and building up with supply up there. Who knows? But it's definitely concerning for me and for other people that were positioned for dollar weakness. Not yet, but it's getting there, right? Definitely getting there. Thank you. You guys are the best. Looks like it's down, yes. 23,800, 23,600, 23,300, 22,200. But level to level, yep. Yep. All right. You guys have a fantastic day. If you are new here, we do live streams every Tuesday and Thursday. And there's no real set time. If there's a big news event, we'll go live 30 minutes before the big news events, because we do like to try to get trades in on those liquidation breaks. But Tuesdays and Thursdays we go live, so just make sure you hit the notification. That way you know when I do go live, because like I said, sometimes I'm not always able to go live at the exact same time every day. Whether it's technical difficulties or internet, or I'm just lazy or lost track of time. Because I'm watching the markets, right? I am a trader, so I will try to get as much info as I can before I go live. Sometimes the trade already takes place, but every now and then we get lucky and we nail some decent trades on the channel live. So make sure you show up for the streams. Thank you guys for being here as always. Thank you for your time. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.